Interesting picks on the top picks list is always the case. This week, no exception. We start with Brian. You've got a stock in the health supplements category.
Right, Herbalife. And really the big story about Herbalife really isn't its earnings, its product, or anything. It is the short squeeze and battle of the titans that's going on with it. We have Bill Ackman of Pershing Square Capital saying that he is short 20 million shares in mid-December. Stock plummets from mid-40s to low 20s. Early January, you have Dan Loeb in Third Point, who is also known for his moves in Yahoo and changing their board. He comes in, buys 8.9 million shares. Then later on, you have a battle with Ackman and Carl Icahn on CNBC, which was very interesting, and then follow that up with a couple weeks later where Icahn buys in for about 14% of the company. So you have this real fight here where you've got a major short of 20 million shares, almost $1 billion of investor money, versus two big, long, and loud type people. Dan Loeb not so loud, but when he makes a move, it becomes kind of loud. So you've got this short squeeze going on right there. The stock is right around now where Carl Icahn bought into it. And when the 13G came out, or 13D came out, that said that he was going to be buying into it. The stock did jolt in after hours up to 45 and then slowly traded all the way back to 40 on the same day. So, I don't think this story is over yet, but the potential for the short squeeze here is so significant that it's definitely worth taking a look into.
So more to this story than just healthy living, right?
Right.
Dad, you've got a REIT you want to talk about. Why is that not a surprise?
Well, I'm looking for growth, but I want some defense in this market too. And Omega Healthcare Investors provides that. OHI is a ticker symbol. They are a REIT focused on skilled nursing facilities or nursing homes. They have about 400 properties in 33 states in the U.S. And if you think about it, the demographics are in their favor. 10,000 people turn 65 every day. More people are going to be using nursing homes in the decades to come, and this company will continue to benefit from that. They just delivered a solid fourth quarter beat. Management provided better than expected guidance for 2013, prompted analysts to revise their estimates higher, sent it to a Zacks rank of 1, which is a strong buy rating. So you've got good earnings momentum here. Like I said, good growth, and analysts expect solid high single-digit, low double-digit funds from operation growth over the next couple years. And of course, as a REIT, they have to pay out at least 90% of their earnings to shareholders to avoid paying tax on that money at the corporate level. So they pay a dividend that yields 6.6%. And they've grown that over the last 9 years at 11% compound annual rate. So tremendous income opportunity here. Like I said, solid growth. You've got defense, and they're trading at just 11 times forward earnings. So it's all at a reasonable price. Could be strong total return potential in 2013 and beyond.
Shiraz, you picked a hotel.
It's more along the lines of what Todd is describing. Wyndham Worldwide, WYNN is the ticker. It is distinct from Wynn Resorts, WYNN. This isn't your typical hotel operator. About half of its business is the timeshare. A third of the business is this vacation rentals or vacation exchange, and the rest, about 15-20%, is the lodging business. And even there, it's more on the franchise side than the actual hotel operation. So very fee-based business, the vacation rental and the lodging. Very stable, very visible, and on the timeshare side, they are the biggest in the world. They have a multi-year inventory of timeshare products in the pipeline, which gives us a very strong visibility into their cash flows and earnings over the coming years. They just recently came out with Q4 earnings. They beat, they guided higher, they raised their dividend, they announced more buybacks, and they have been buying plenty of their shares already. They were expected to, and they had guided towards 600 to 700 million in free cash flows annually for the foreseeable future. That was their standing guidance. They just recently raised it to about 750 million in free cash flow into the future. So an amazingly strong story. We see that momentum showing up in estimates as well. in the Zacks rank. So strong earnings growth, impressive cash flows, good Zacks rank, and pays a solid dividend.
Okay, thanks for that. Don't forget to check out other articles by these gentlemen on our website, zacks.com, if you're not there already watching this video. With everyone here, I'm Terry Ruffalo.